What's been happening in the market? And more importantly, what does that mean for you? Welcome to LVZ Market Minutes, the quick and refined update designed for savvy investors who value clarity over clamor. Our team breaks down the trends, movers, and the headlines that matter so you can stay informed and cut through the noise. Let's dive in. Past performance does not determine future results. Securities offered through Harbor Investments, Inc., member FINRA SIPC. Investment advisory services offered through LVZ Inc. LVZ Inc. is a federally registered investment advisor.
Joey, June is certainly a month for the history books, but the really neat thing about the market is that every day is an opportunity to make history in the market. Today, June 27, when we're sitting down for this conversation, the S&P is hitting all-time high records. Fun history-making moment while we're talking today, but of course, every day in the market is almost a history-making moment. Talk me through what's happening today in the market with the new S&P all-time high.
It's been exciting and obviously a breath of fresh air coming off the last 2 months and some of the concerns. And if you look at the intraday numbers to be down 20%, it was like just touching on a bear market, but technically hit it if you're looking at that intraday value. And then to recover so quickly, that V-shaped recovery, it's been up and down. It's been a roller coaster, but then to hit the stride going back up again and to hit an all-time high, which is a great indicator for the market. It's a good day.
Tomorrow could be completely different and go the other direction. And that's what's really fun to sit down and digest what's going on with you each month. This month, there's been some incredible reports regarding AI, the exponential growth of it, and financial literacy based on how Americans are stacking up compared to the last 5 years. So I'm excited to dig into the topics today. This quote from their Q1 2025 earnings call from Roblox, co-founder and president CEO David Baszucki was talking about and highlighting that ultimately AI is a human acceleration tool. He said something that is going to allow individuals to do more, hopefully long term, and see people coupled with the technology. From the study that was released, it really mirrors the trend line of the introduction to Google, the introduction to social media, as far as users adopting this technology. Talk me through some of the stats in that study that were interesting, and we can digest that.
The one that stuck out to me probably the most, so on that conversation of the adaptation and people using the tool, they pulled the numbers for the monthly users of ChatGPT. And the point that they were making was that it's gone up 8 times over the last 17 months. But what I noticed on the chart that I thought was probably even more significant is that it doubled over the course of 2 months. It went from 400 million monthly users to 800 million monthly users over the span of 2 months, February to April. And I just think that's incredible growth. It shows that these tools are going to become very mainstream, even more so than they are already. Everybody is going to use some form of AI. There's a lot, to your point, that it's should be used to accelerate human growth and human development. There's a lot that still needs to come into play as far as the compliance of it all and making sure that there is accuracy within the information. But my optimistic hypothesis on where this goes is that 20 to 30 years from now, you've got a generation of kids that grew up learning how to use AI tools, and they have been taught that if they can think of something, they can execute it with the AI models. Potentially that creates an incredibly entrepreneurial generation.
Mm-hmm.
And I think that'd be really cool to see. Again, that's my hopeful best case scenario. There's a ton that needs to happen between now and then.
Mm-hmm.
But it's an incredibly powerful tool. A lot of the information in this report that came out is just astounding when you compare it to some other technologies and the way that those have been adopted over time.
Mm-hmm. And of course, being an entrepreneur doesn't mean just starting your own business. It can mean being entrepreneurial in the place that you find yourself seated in a corporation. We're talking about investing in companies. That's an amazing tool for not only companies to leverage entrepreneurially minded employees that are partnered and paired with this AI technology. So one point in here tracked the mentions of AI in corporate earnings transcripts for Q1 from 2020 to Q1 of 2024. And the trend line is exponential for major companies. And the trend line up is amazing to see that potential partnered with employee talent is going to generate production efficiency for companies and ultimately earnings at the end of the day. So the value of employees in companies leveraging the technology is also increasing. And when you're thinking about, as investors, you're ultimately investing in companies. For companies to be able to reference AI technology in their earnings reports, that's a positive thing as an investor, because you're looking for companies that are growing in production, growing in efficiency, growing in greater profit margins. We've talked about it before, where companies say that they're going to be using this, or they're spending a lot of R&D on AI technology. So now you're seeing that as a result on the back end. When they're talking about earnings reports, the amount of times that AI technology is referenced in those earnings reports from 2020 to 2024 in the first quarters has gone up significantly. And if you look at the trend lines for 9 of the companies that are in the market, you can see that reference and then be able to track back their earnings. So can you tell me a little bit about that statistic?
So out of the Mary Meeker Bond trends report for AI, they have a slide looking at the increase in mentioning of AI. And what I think is very significant about that is that not only are a lot of these companies mentioning AI, but they're also talking about how they are implementing AI. So with this increase in the conversation, it's not just talk, it's also people mentioning how they're implementing AI, how they're developing. The CEO from Duolingo has this really good quote in their earnings call where he's talking about their new chess program that they have on the app. And he says, I should mention something amazing about the new chess curriculum is that it started with a team of 2 people, and neither of them knew how to program. And not only that, they just made prototypes. They had the whole curriculum. They ran it through AI. And in addition, he mentions here, neither of them knew how to play chess. So this shows you how powerful implementing AI can be to these companies who are developing new products and new design programs, that they really need to think of something, have people who are driven to accomplish it, and AI can help them reach that finish line.
It's incredible. I mean, to think about building something completely from scratch that you're not an expert at all in, but you have a great idea, goes back to that idea of entrepreneurship and cultivating this culture of entrepreneurs who can dream it and are given the tools to then build it. It's an incredible time to think about the future of American ingenuity. That is for certain. So aside from AI technology absolutely exploding as far as user adoption, thinking about American ingenuity, in tandem with that, as far as an American consumer or the average American, the TIA Institute released a personal finance index with a ton of information in regards to financial literacy and the average American. The information here really positions that there's been very little change in financial literacy over time for the American population. Can you speak to some of that data that was interesting in that report?
The few things that stuck out to me, basically, if you go back to the 2017 report that they gave, it's just flat. So to articulate that, you could say in a very straightforward way, nobody's learned anything over the last 8 years. That's really surprising to a certain extent, because I do feel like people have learned a lot, and maybe the market has learned a lot. Investors have learned from past experiences and have seemed to be more resilient in their investing and in their finances, as far as continuing to contribute to 401ks. That's money that continues to go into the market. People are buying dips. When the market went down in April, there was record highs of money flowing in from the retail investors. What could be a play with that is it's potentially, you could say, people are investing perhaps better than ever, but they still don't know why. They're just taking information from online, whether it's an AI prompt, whether it's some podcast they're listening to. That could be fine. It might be okay. You might not need to know exactly why you're doing what you're doing if you're doing it well. But it reiterates that some people really are kind of flying blind with their finances, and it establishes a need to at least have conversations with an advisor. Maybe it's not a full-on partnership, but just to run some stuff by someone who you trust in the financial field, because there are a lot of avenues that the general populace aren't going to know answers to.
Right. And that's indicated by the functional knowledge on one of these charts. It measures the percentage of personal finance index questions categorically going from very basic to a little more complex. So obviously borrowing and saving are pretty basic from a consumer standpoint. Consuming, those are about in the 50 to 60% correct range. And then you move down to earning, go to info for sources, investing, ensuring, and comprehending risk. So scoring the lowest for correct answers is comprehending risk. So it justifies, yes, people are making better decisions, but they're not sure why. They're not necessarily able to comprehend those risks themselves, but there's some layer or filter that's helping them do that. That's really interesting that they're not necessarily gaining in more complex knowledge and retaining that in the effectiveness in the market for them.
Right, yeah. And I thought it was really interesting as well, like borrowing and saving, consuming as the top three accuracy for people taking the test. And so I looked through some of the questions. They weren't all on this report. But those are questions that you can probably read the 4 prompts of a multi-choice and be able to figure out what the right one is.
Right.
Whereas you get into a more complicated question like risk, it exposes that people might not know how to think something through, where we can see that someone's borrowing, saving, consuming are their best testing subjects. That doesn't inherently mean that they're doing it very well or that they know how to implement it in their life. So there's only so much you can glean from a test, but it's very interesting to see that, say what you might like about the consumer or the investor or the U.S. citizen, the financial literacy hasn't really improved over the last 8 years.
And there's a lot of risk to assess on a daily basis. I mean, the month of June was full of market ups and downs. It was full of new international conflict in the Middle East. Obviously, oil prices making moves and people concerned about oil prices. So talk a little bit about how that risk comprehension goes into international economics and how that impacts consumers.
So we were on a call last week, and one of the questions that had come in was about the oil prices, and they were asking about rising oil prices and how is that going to affect their portfolio. We redirected it to say, to a certain extent, you're probably going to see that more as a consumer at the gas pump than you will see it impacting your portfolio in a meaningful way. If you're diversified, you're not going to have a full massive exposure to oil. And so maybe find ways to separate what it means as a consumer of a good versus what it means as an investor. And also then you look at what happened to oil a few days later. The price dropped over 12% because there was some resolvement of the issues in the Middle East. And it reiterates that every time you think you know what's about to happen, you don't. You don't know how something will play out. And so if you are making significant decisions to your investments based on what you perceive as, of course, this is going to happen, you're gonna find yourself very surprised quite often, because every time you think you know what's going to happen in the market, you don't know. And that's what managing risk is all about. And so there's a lot of conversations that you can have with clients that help them understand how various headlines or things that are happening in the world are significant from a human perspective and a consumer. But as an investor, you have to find ways to separate the emotions of general high anxiety and concern of what was going on in the Middle East, and bombs being dropped is not a great situation for anyone. But as an investor, you don't always need to react. And there can be dissonance there to feel like your inaction in investment means you don't care about the scenario. But that's where you need to understand that sometimes you don't know how real life things are going to affect your investments. And so to overreact to something that you're feeling stress about can hurt you in the long run.
Sure, that juxtaposition of being a consumer versus being an investor is, it's a critical lens that people need to look through. And if you're not able to separate or splice those, that's where it's incredibly important to have someone delegated to handle one of those two things for you. For most people, it's delegating the investor side of it and offloading to a financial advisor or investment team to make those emotionally not charged decisions, right? To look at things objectively, to be proactive without reacting emotionally. It's not that you're not human, you're just looking at things from a very, very objective lens.
Right.
Any final words for the month of June or any other topics that you want to discuss, Joey?
As we've talked about risk and the general consumer and the S&P being at an all-time high, I think an important point to make is that the S&P being at an all-time high, when the markets hit all-time highs, that's a very good sign of a healthy growing market. You can perhaps overthink it and be like, oh, the market's higher than it's ever been, which means I have more to lose than I've ever had to lose. But generally, when we're hitting all-time highs, it's because the market is doing well and it's doing what it's supposed to do. So don't be afraid of a market at an all-time high. In fact, this is a great opportunity to continue to put money into your retirement accounts, into your investments, and just enjoy the fact that over long term, the market right now is doing what it's supposed to do. And that's a good thing.
And that's why that long-term strategy is so critical, right? We're not just looking at one 5-minute segment where on June 27, the S&P 500 hit its all-time high. Right. We're looking at a long tenured time period in the market of decades plus.
Exactly.
And so it's that long-term vision that makes being in the market effective. Well, from market highs and lows to conflict and financial literacy for the average American consumer, it was great to sit down and explore all of those topics today. It is really interesting to see a foreshadowing of a long time ago, social media wasn't a part of everyone's everyday life, and now it is a primary modality for communication and connection. And the trend line for adoption really mirrors the trend line for AI user adoption. So to think about even in the next couple of months, what might that look like for that technology to be a primary modality in our everyday life, in our everyday functions?
Yeah.
That's cool to think about. It's neat to imagine the possibilities,
right?
Not only for the market, for the economy, but for betterment of all, of humanity too. Any words of wisdom you want to leave us with?
Enjoy your summer and maybe turn off the news a little bit.
I feel like you've said that before. Hey, we didn't talk about tariffs.
We didn't talk about tariffs.
That concludes this month's LVZ Market Minutes. Quick, clear, and curated to keep you informed and empowered. If you found these insights valuable, be certain to tune in each month for a strategic update. Until then, stay informed, stay invested, and have peace of mind that our team is actively monitoring the markets and managing your portfolios.